in OPEC output. And US markets recovered as Nasdaq scored its first 2% up move, whereas the S&P climbed over 1% for the first time since 2024. And the bond yields, of course, still hover around 4%. And Sony plans to call off its merger with Z. That's according to Bloomberg. No official word yet from either parties. And bonanza for Bajaj Auto shareholders. The company has announced a buyback at 10,000 rupees a piece. This is against its current price of 7,000 rupees per share. And Adani Group companies will invest as much as 42,700 crores in Tamil Nadu across different sectors. Now, those are your top headlines, but let's start off with oil. At the moment, we are looking at a lot of weakness, and it has, in fact, slipped nearly 4% in trade yesterday, even as Saudi Arabia announced a price cut. And remember that the market does remain oversupplied at the moment. This is the weakness which we did see earlier on in the year, at the starting of the year, owing to a lot of geopolitical conflicts. But it does seem like that has been kept on the side at the moment, and we are seeing weakness. At the moment, we are seeing the crude at least trade at around $70.9 per barrel. And, well, we're going to keep an eye on that one with the kind of drop we have seen in terms of its price. That said, when it comes to the markets abroad, at least as far as US is concerned, it was a sharp up move for the Nasdaq, up as much as 2% for the first time. That is, this in 2024 is when we actually saw a good 2% intraday movement for the Nasdaq, and the S&P 500 as well advanced by as much as 1%. A lot of the strength comes ahead of inflation data that will come through over the course of this week. And let's not forget, unemployment figures is the other thing that the US markets are going to keep an eye on. As far as Asian markets are concerned, we're looking at a rebound after the sharp sell-off that we saw yesterday. So Shanghai, Hang Seng, Nikkei, all of them up and about in trade. Nikkei specifically up around 1.5%, but well, marginal gains for Shanghai, Hang Seng up as much as, well, 0.5% as well. So keep an eye on that one. I reckon to a certain extent, we're likely to see about a short covering. Should we open with strength as well here in Indian markets, considering the kind of weakness that we saw yesterday. But from there on, we move on to the big conversation around crude oil. The question really is that where do we go from here? Let's find out and get in an expert opinion. We have Peter Mcguire of XM Australia joining us on the show. Peter, good morning, and thank you so much for taking the time out. Well, let's just start off with your assessment of demand and supply with respect to crude and the kind of implications on prices.
Well, good morning, Agam. Greetings from Sydney. You know, when we saw what overnight was quite a dramatic move, two months we haven't seen anything like that, down nearly 4.1% for WTI, really crushed as far as price. And that really took everyone by surprise, considering you had that geopolitical consideration with Hamas, Hezbollah. We've had, you know, the leaders killed in these Israeli strikes. That seems to have dissipated, and there's no geopolitical, I feel, premium built into price. And you saw the Saudis cut their price into Asia. So, yeah, obviously at the moment you'd have to say it's looking a little bit soft, but that can change anytime soon with geopolitical, Agam.
Right. So what are the factors at the moment that could perhaps lead to even more weakness in crude prices?
Well, weakness would be if nothing eventuates as far as geopolitical tensions, that will wash out price, and you'd probably have more softness to the downside. So there's the first part. The second part is if you don't see any constructive mechanism as far as OPEC and how they deal with these prices, whether they just say, well, look, we're quite happy to take a $70 or a $65 handle, or do you see just a continuation as far as softness across that whole sector? That would be to the downside, but there's equally an argument for the upside as well.
And what would that argument for the upside be, Peter?
Okay, geopolitical concerns really get out of line. You've got the Houthi rebel situation, Agam, that creates mayhem across the Gulf of Aden, leading into the Red Sea. The Suez Canal becomes a choke point. Shipping needs to go around the Cape of around Africa. That would really increase inflation costs globally because of the shipping of goods, how much it extra cost. Then you've got other concerns as far as war premiums built into price. and that really escalates to the upside. So, it depends on how this whole situation is created. And then naturally, as we saw earlier in October, it really adds, $4 or $5 or even up to $10 of war premium very quickly.
Right, Peter, I reckon that OPEC and non-OPEC production would largely move in tandem. Is there a big difference between the two, and could there be a divergence? And if there is a divergence, could there be a big difference in price as well?
Well, there could be a divergence as far as OPEC Plus and the broader market. So remembering what America produces and other big producers. So yes, their argument is yes, there would be, I feel, some form of divergence. Secondly, we've just got to work through that to see I think the mechanisms behind the consideration, where does price take us? We can speculate all day and draw up scenario plans and, create a business case for what happens, but let's just see if it does materialize, because you're talking about major supply shocks that could enter the market as far as geopolitical concerns.
Right, Peter, we'll leave it at that. Thank you so much for taking the time out this morning and talking to us about what we can, in fact, expect from crude. We'll continue to keep an eye on that one. Well, on that note, let's shift focus to our own markets at the moment. And, of course, we will be watching out for not just the indices, but also what's happening in the derivative space. Let's not forget that we are also keeping an eye on the Nifty expiry. But I'm going to start off with the index futures. We did see a sharp sell-off in yesterday's day of trade, with the Nifty coming off by nearly 1% and, in fact, testing 21,500 on the lower end. In terms of open interest, while we didn't see a significant addition, naturally, a lot of unwinding came through, and that has resulted into a drop of nearly 1% in open interest. As far as the Bank Nifty is concerned, the weakness was a lot sharper. In fact, a cup of nearly 1.5%, and we have now very easily lost out on the 48,000 mark. Can we climb back over today, tomorrow? Is that a possibility over the course of the next few days? That's a question that needs to be answered. But for now, we have seen a significant amount of shorts building in, even as the open interest climbed by as much as 24% towards shorts. Now, as far as your option market is concerned, we did see a lot more writing in calls around 21,600, even as the Nifty moved well below that mark, testing 21,500 at the moment. And naturally, we also saw a lot of unwinding of puts being sold. But where does that leave us when it comes to your overall open interest distribution? So at the moment, we have max OI now shift to around 21,700 from 21,800 yesterday. And as far as calls are concerned, and a substantial amount of unwinding seen around the 21,500 puts. Remember, it still is the one with the max OI, but that open interest distribution has, well, nearly halved now at the moment. So it does seem like we could be, bracing for a little bit more volatility, perhaps a little bit more weakness as well as we move into trade today. That said, it is the Nifty expiry, so what are we watching out for? We have already seen a lot of writing in terms of calls around the 21,400 levels, and those strikes are naturally going to provide a lot of traders with some amount of resistance. In fact, 21,350 and 21,300 will also be levels to keep an eye on with respect to resisting factors on the upside. Now let's talk about the stocks. And we did see a lot of weakness across. In fact, fresh shorts in something like a Navin Fluorine, Bandhan Bank, Hindustan Copper, Polycab, all of them looking at declines with an open interest increase towards shorts. And in terms of those stocks which saw unwinding, we in fact did see longs unwind in Delta Corp, Godrej Consumer, GNFC, and Dr. Lal PathLabs. All in all, the market breadth was not encouraging. And the question is, if we can expect covering, when will it be? Will it be today? That's something that we need to find out, but we're expecting volatility considering the Nifty expiry, and a lot of your large banking names are also part of that index. So that's something that we will be keeping an eye on. On that note, we slip into a short break, but don't go anywhere. On the other side, we talk about stocks and a lot more. Stay tuned to NDTV Profit. Welcome back. A long list of stocks which are in the news, those that we need to keep an eye on. Aurobindo Pharma, Cipla, GMDC, along with Z Entertainment as well. Let's get in Harsh Seta to give us that list. Harsh, good morning.
Good morning, Agam. Let me start off with Z. As you correctly said, a long list going forward, but sources, or rather agencies, seem to suggest that Sony is set to be calling off its $10 billion plan to merge with Z, and now that notice is set to come in before the 20th of January. There was a 1-month extension on the 21st of December, so that announcement was largely, or rather this announcement is largely in line with that 1-month extension given with regard to the merger. But it seems like the cancellation is on the back of the standoff over Puneet Goenka's leadership in the merged entity. There are mixed views here of analysts. Some seem to suggest that Z will balk, they will give in to some of Sony's demands, while others believe otherwise. So for those who believe that Z will give in to Sony's demands, the stock impact will largely not happen. Quickly moving on, we have the likes of a GMDC in focus. Company has received environmental clearance to expand its lignite capacity in Surka, and that has gone up from 3 MTPA to 5 MTPA. Of course, it adds a substantial amount of revenue as well for the company as some of these expansion plans start to kick in. So that's one key positive. In fact, the company clearly has suggested that this will substantially drive revenue growth for the company. It also adds flavor with regard to fuel energy needs across Gujarat and Saurashtra, and this kind of helps in that endeavor. Quickly moving on, you have the likes of an Oro Pharma also in focus. US FDA inspection at its Telangana facility has revealed that the US FDA has suggested voluntary action indicated as the classification of the inspection. This obviously is a sort of a positive because it means that certain objectionable practices were found, but the regulator or the agency is not prepared to take regulatory action on the back of these findings, and therefore as of now there is no impact on the company. Quickly moving on, you have the likes of a Cipla. The company's UK arm has announced a JV with Chemwell Biopharma and Manipal Education and Medical Group. The JV is set to develop novel cell therapy products for major unmet medical needs in the US, Japan, as well as EU regions. Cipla is set to own roughly 35% of the JV and will provide product development. Chemwell will use its expertise in biologics, and Manipal will undertake healthcare delivery for this particular set of products, which is the novel cell therapy. Now, quickly moving on, you have the likes of Affino also in focus. The payment bank has applied for a small finance bank license. What this means is the payment bank can now start taking larger deposits, in surplus of 2 lakh rupees, which is one major positive because your cost of funds will go down substantially as it starts taking those deposits. And secondly, it can also start providing loans, but up to certain limits. Now, mind you, a payment bank is not allowed to provide any loans, but a small finance bank is. Fino itself has suggested it will not be giving out loans, so that's one thing. But nonetheless, some amount of flexibility will be given, and therefore, that's a positive for Fino.
Right. Harsh, thank you so much for getting us those updates. And from there on, we move on to more MoUs, this time from the Tamil Nadu government. And we have the Adani Group Brigade along with Eicher Motors in focus. Let's get in Mihika for more details. Mihika, good morning.
Good morning. So first I'll start with the Adani Group, which has collectively signed a 42,700 crore MoU with the Tamil Nadu government at the state's Global Investor Meet. Now the biggest investment will be coming from Adani Green, who will invest 24,500 crores. Now this investment will, phase through will be put into 3 pump storage projects over the next 5 to 7 years, and they're targeting a 4,900 megawatt through the investments. Now Adani Concax will invest 13,200 crores, and they'll invest invest in a hyperscale data center over the course of 7 years. And then we have Adani Total Gas that will invest 1,568 crores over the course of 8 years, and they will expand offerings in terms of city gas distribution, LNG offerings for minings and trucks, and EV. Then we have Brigade Group, which has signed a 3,400 MoU with the Tamil Nadu government. Now, it has a potential employment of 25,000 individuals, and the MoU consists of 2 MoUs. First is the one signed with the Chennai Metropolitan Development Authority, and this is mainly to expand Brigade's presence, and the MoU is worth 2,000 crores, and they'll set up 2 high-rise residential buildings in an IT belt. And then there's ELCOT IT and Digital Service Department, and this MoU is of 1,400 crores. And the last MoU is Aisha Motors, which is a 3,000 crore MoUs, which will be invested over the course of 8 years, and they'll set up greenfield and brownfield projects to develop new products and EVs.
Stay with us, Mika. Why don't you tell us about BEML's latest order win, as well as Ambuja Cement's update with respect to its acquisition?
Yes, so first I'll start with BML, which has got an order from the Ministry of Defence, and the order value is at 329.87 crores, and they will basically supply mechanical minefield marking equipment. And then we have Ambuja Cements, where the open offer by Ambuja Cements to acquire the 26% stake held by minority shareholders in Sanghi Industries will launch on Jan 15, and this offer will close on Jan 29. Now, Ambuja has offered to buy 6.71 crore shares at a price of 114.22 apiece, which aggregates an amount of 818.74 crores. Now, back in August, Ambuja had acquired 56.74% of Sanghi Industries, and the additional 2.23% stake was acquired on December 5th. And the Sanghi acquisition has raised the cement capacity of the Adani Cement Group to 73.6 million tons per annum.
Right, Mika, thank you so much for getting us those updates. And on to major news for shareholders of Bajaj Auto. Well, the board meeting has ended, and we now have updates with respect to its buyback. It's a significant one, a 4,000 crore one, and, well, at a good amount of premium as well. We have Tushar joining us to give us more updates. Tushar, good morning.
Good morning. As you pointed out, it's a massive premium on which Bajaj Auto is trying to do its second buyback in as many years. So the board has approved a 4,000 crore buyback in the coming days or whatever. It will reach a repurchase rupees 10,000 per share. The current market price is at about rupees 7,000. The company will repurchase about 40 lakh shares. In volume terms, the buyback is about 1.41% of the total number of equity shares of the company. In value terms, the buyback is 16.33% of the total paid up equity capital, as well as in value terms, it is 14.49% of the free reserves as on March 31st, 2023, as in the previous fiscal. So what we are guessing right now is it's a big jump from what we saw in the previous year. The amount was 2,500 crore. The share price was 4,600 crore. So shareholders intend to can stand to gain getting as much as premium of 30% premium right now. So that is what we're getting the sense from Bajaj Auto at this point of time.
Right, Tushar, we also have a broken note on Maruti Suzuki. Can you take us through that as well?
Yeah, so MK is saying that there is some amount of incoming pain that it sees for Maruti Suzuki. So there are three-pronged trouble that they are seeing. So one is high inventory pileup of small cars. There's a sharp decline in the order book as compared to last year. And there's near normalized production at this point of time. So you also have to remember that in the last 1 year, Maruti Suzuki launched 4 SUVs. That is the new Brezza, the Grand Vitara, the Jimny, as well as if I'm forgetting at this point of time, so this is basically 3 or 4 SUVs. Now, what has happened is these cars have come out into the market now. So we are not expecting any fresh launches until the time Maruti Suzuki launches its first electric vehicle in October of this year. So that is one. So, but what can trigger an upside is the revival in small car sales, similar to what we are seeing in small capacity motorcycles at this point of time. Now, given that part, are we looking at a weak Q3 for Maruti Suzuki? MK says that there is a lack of operating leverage on declining volumes quarter on quarter. There's a deterioration in the SUV mix from 33% in Q2, that's the total share in the total sales, to 31% in Q3. Higher discounts in the October-December period. So remember, this is the final quarter of the calendar year. So there are a large number of discounts to clear off the inventory. So in that sense, we'll be seeing some more discounts coming in, and that should reflect in the top line as well. So there's a rapid rundown of the order book, 288,000 in the July-September quarter from 412,000 in the January-March quarter. So what we are looking at is a weaker, what MK sees is Maruti posting a weaker Q3 as compared to a Q2.
Right, Tushar, thank you so much for getting us that update. It is a significant downtick when it comes to its order book. So we'll, of course, continue to keep an eye on Maruti Suzuki, which is, of course, one of the biggest, passenger vehicle players in India. But, Q3 business updates keep pouring in. And let's get in Mahima on that note to give us an update on that one. Mahima, good morning.
Good morning, Agam. So we have multiple business updates that came in yesterday. First one is Metropolis Healthcare, where their core business grew by 12%, which was on the back of 9% growth in their volumes. Now their premium wellness and specialized segments grew the fastest, and their B2C segment grew by 14%. And their Q3 margins have slightly remained lower because of the rains in Chennai and Tamil Nadu. Moving on to IRB Infra, the total toll collection increased at 26% year on year. The toll collection stands at 488 crores as of December versus that of December 22 last year. It was 388 crores, and the highest toll collection was from the MP Expressway Private Limited. Then we have Tata Motors JLR, where the wholesales stand at 1.01 lakh unit, which is up 27% year on year, and retail sales stand at 1.09 lakh units, which is 29% up year on year. The Q3 client orders were also produced at 1.48 lakhs versus that of 1.68 in Q2. So this has slightly declined. And if we talk about the retail volumes, they have been higher in all the regions. UK was up 55%, Europe 27%, China 28%, overseas overall was 49%. Their order book as of Q3 ending stands at 148K versus that of 168K in Q2. And lastly, we have Bajaj Finserv, where total new business premium stands at 962 crores and gross direct premium stands at 1,425 crore. So these were the this is the overall review for the Q3 business updates that we had yesterday.
Right, JLR is the big one there. Mahima, thank you so much for getting us those updates on Q3 business outlook, as well as what we can expect into the quarterly season. But let's wait. Before we wrap up, let's very quickly take a look at what's happening with the GIFT Nifty, where we are at the moment. We're looking at strength, 100 points up, or as far as the implied open is concerned. The question then is, can this trigger about a short covering, especially since we have seen such a sharp dip in the last hour of trade yesterday? Well, we will know in time, and that won't be too long, about an hour, a little over an hour from now. But keep an eye on that. And on that note, it's a wrap on this edition of All You Need to Know. Stay tuned to NDTV Profit.